So, ladies and gentlemen, it is often said, alone, we can go fast, but together, we can go farther. And today, ladies and gentlemen, through collaboration and innovation, we are setting this stage to go farther than ever before. On that befitting note, a very, very good morning and welcome to all our distinguished guests, leaders, and friends from across the financial services and wealth management industry. You know, it is such a pleasure for me to see such an incredible gathering of visionaries who are actually shaping the future of this industry. Namaste. My name is Melanie Pace, and it gives me immense pleasure to welcome you all here. Thank you so much for investing your time with us and for being a part of this wonderful, wonderful journey. You know, with a show of hands, can I ask you how many of you feel that the financial service world is changing rapidly? Most of you? Exactly. So, you know, technology, evolving investor needs and regulations are keeping us on our toes, aren't they? And that is why, ladies and gentlemen, we are here. Because KFin Technologies is absolutely proud to launch something that is truly, truly special. It's going to be a new chapter in how we collaborate, we innovate, and grow together. And do you know what is the most special part about it? Today is only and only about you, each and everyone that is seated in this very room. Because you, my dear friends, are the change makers, you are the transformers, and your potential is absolutely limitless. Now that deserves a huge round of applause, doesn't it? So the big question is, what do we have in store for you today? Well, we've lined up power-packed panel discussions, fireside chats, keynote, and insightful presentations, all designed to spark fresh ideas, tackle real challenges, and reimagine the future of our industry. Also, we have some very exciting giveaways. We are going to be giving 3 iPads throughout the day. We have a lucky draw specially curated just for you, so please do stay tuned. I'm sure most of you will agree when I say that when we attend conferences, we definitely get a lot of insights, a lot of fresh perspectives, but do we actually get an opportunity to share what we feel? That's very rare, isn't it? But that is going to change here, today, in this very room, because KFin Tech is built to listen to you. Your feedback, your ideas, your inputs will shape how our new initiative grows. So, ladies and gentlemen, today, let's co-create the future of financial services together. Let's spark new conversations. Let's build stronger connections. And most importantly, let's ignite the future. And now to take this wonderful day forward and to officially welcome you all, it is my absolute pleasure to invite on stage the Chief Operating Officer, Domestic Fund Services at KFin Technologies Limited. With over 18 years of experience across sales, business development, audit, finance, and risk management. A chartered accountant and certified Scrum Master, he held leadership roles at KFin, Kavi, Shinhan Bank, and IndusInd Bank. At KFin Tech, he drives operational excellence, digital transformation, and innovation, strengthening mission-critical solutions for asset managers, mutual funds, AIFs, pension funds, wealth managers, and corporates in India and abroad. Please put your hands together for Mr. Praveen Shankaran. Welcome, sir.
A very good morning to each and one of you. On behalf of KFin Tech, I'm deeply honored to welcome each one of you for a prestigious event called Ignite. We are deeply honored with the presence of some of the most respected and distinguished dignitaries of the industry, the CEOs of asset management companies, the business leaders of the asset management companies, the prominent distribution houses, their leaders and senior representatives. At KFin Tech, we always believed that we are not just a service provider, but more a value creator. Together with all of you, we have been able to expand ourselves, create newer solutions for the industry that has shaped the future of this industry. Ignite is one such initiative, a program which is conceived by KFin Tech to deeply engage with the distribution houses, to listen to you, to learn from you, to understand and create platforms and services that will change the course of this industry. I once again sincerely thank you for your presence here and the confidence that you continue to place in KFin Tech as your partner in this journey. We look forward to the interesting sessions during the day, the insights that you will share, the collaboration that will emerge, and the collective progress that all of you can achieve by partnering with us. On this, I once again extend a very warm welcome to all of you and wish you a very productive and engaging experience at Ignite. Thank you.
Thank you, sir, for kickstarting this event on such a positive note. And now, going ahead with the agenda, ladies and gentlemen, let's begin with our keynote address. Today, India stands at a remarkable inflection point. With a fast-growing economy, rising global relevance, and an ecosystem ripe with opportunities, the outlook for our markets and investments have never been more dynamic or promising. And to help us decode this journey and sharpen our perspectives on what lies ahead, we have with us a visionary leader. Well, he is one of the most respected voices in India's investment landscape, a seasoned fund manager, thought leader, and the founder and CIO of 3P Investment Managers. Well, over the years, he has consistently guided investors with his sharp insights, deep understanding of the markets, and conviction-driven strategies. Ladies and gentlemen, before I invite our speaker, can I please request you all to keep your cell phones on silent? Thank you. Please join me in welcoming on stage Mr. Prashant Jain as he shares his keynote on India at an inflection point, economic outlook and investment opportunities. A warm welcome, sir.
Thank you. Good morning, friends. Very warm welcome to all of you. I feel at home after a gap of many years. And all of you are the architects of the mutual fund industry in India. And I still feel the journey has still begun. We were discussing with some friends, 25 years back, Prudence Fund was 10 crores. And today it is 1 lakh crores. But I still feel the future is much bigger, much brighter than that. So thank you, all of you, for bringing this industry to where it is. And I thank Srikanth and KFin Tech for this wonderful opportunity to share some thoughts with you. The host mentioned, and all of us raised hands, that how fast is the world changing. Indeed, the world is changing very fast. But I think in the investment world, the more things change, the more things stay the same. So I was discussing with Prateek yesterday that what do I talk about? Whatever I have been saying for 30 years, that holds true for the future as well. On that note, let me share with you some thoughts about the economy and my view of the markets going ahead. So this is a very simple slide, but I think a very powerful one. The blue columns, they give you the decadal growth rate of India in real terms, the real economic growth rates over last 45 years. And the columns at the bottom, they give you the key events over this 45-year period. And what is remarkable about this slide is that our growth rates have stayed virtually the same. The headlines have kept on changing. Mostly headlines are adverse because for some reason we like to read negative news more than positive news. But through all these changing headlines, one thing that has stayed constant virtually is India's real growth rates. That's a very, very strong, reliable and optimistic picture, and we are fortunate to be in this country for all these years, and I think for many, many decades to come. So what has driven this growth rates? If you focus on the box in the middle, these are some of the key drivers of India's growth rates. So I often say that India grows at night, because the silent drivers of growth are seldom acknowledged. So our population is growing. Joint families are breaking up. That has a negative side also, but at least for the economy, if number of families grow faster, it leads to faster growth. In China, I read somewhere that almost 25% of families are single person families. So joint families are breaking up pretty rapidly, and the more the number of families, the more is the consumption. So I think in India, families could be growing somewhere around 2.5 to 3.5% a year. The another thing which India is very fortunate to have is we have a very large number of very skilled, talented and ambitious people, young people. We have lots of entrepreneurs. So it is not easy to find such a large and smart group of people, and they are globally very competitive in terms of costs also. So we have absolutely wonderful human resources. We have great natural resources. Sun, water, land, minerals. This country has everything. What we lack probably is fossil fuels, that's all. But I think in the next 10 years or so, as EVs gain prominence, as solar energy becomes more commercially viable, our dependence on imported fuels will also go down sharply. And finally, while we have grown immensely over the last 45 years, if you look at the future, you can't help but feel very optimistic, because despite all this growth, today the penetration of consumer discretionary goods and services is still very low. So just about 3% of Indians fly once a year. So 97% are yet to experience air travel. Only 7% homes in India have air conditioning, and just about 12% homes have a four-wheeler. So that tells you that despite being a 4 trillion economy, a very large economy, and on way to becoming the world's third largest economy in the next few years, in per capita terms, we are extremely low, and that gives you a huge headroom for growth into the future. So these are some of the factors what have driven growth in India all these years. And you will agree with me that most of the things which we keep on reading about, changing governments, wars, these fundamental drivers of growth are not impacted. And that is why you will see in the chart at the bottom that India is not just one of the fastest growing large economies of the world, but the volatility of India's growth rate is one of the lowest. And that is because of these very structural drivers that are in force in India. Let me now share with you some thoughts, what has changed in the last few years. And I think while COVID was extremely unfortunate, it put many of us in great difficulty. Many families have suffered irreparable damage, but it has unleashed few forces which have improved the economic outlook of India. So what has happened after COVID? I think two changes have been most prominent, top of mind. One is digital adoption, and that is why you see what has happened in the demat accounts. They have gone from 3 crores to 20 crores. Digital adoption makes things so seamless, so quick, so faster. I think it also led to the acceptability of remote working overnight. And that has opened up a world of opportunities for India. Because the moment a CEO feels that if someone is working from home in New York or London, why not shift that job to Hyderabad or Chennai or Bangalore? you see the impact of that. If you look at the right hand side chart, the orange line, that is the non-software net service exports. So we have always known for 30 years India is a go-to place for software, but look at non-software service exports, the net service exports, they were zero in the year 2020, and in fiscal 24 it was almost 30 billion US. So 1% of India's GDP is contributed due to these global capability centers and few other services that have gained prominence. I think this has had one more very positive impact, but that I will come to in a bit. Please bear in mind that India's service exports, non-software, have grown from 0 to 1% of our GDP. I think in manufacturing, where we have not executed to our potential at all for a variety of reasons. I think the good news is, fortunately, we are getting our act together now. And if you look at India always had a right to win or capabilities in mechanical things, in chemical things, in textiles. And we have not scaled up, but at least capability was there. Where we had no capability, no right to win was in electronics. Because if anyone used to ask me, we have no ecosystem in electronics. But look at what has happened. I think almost 30 to 40% of Apple phones will be assembled in India this year or maybe next year. And that tells you that we can make it happen even in an industry where we had no background, no understanding, no ecosystem. And now we are working backwards. And I read an interview of Honorable Minister Vaishnav, and he said that the value addition in Apple phones is today 20% in India, which is one of the fastest in a short period of time. And we aim for a value addition of almost 40% over the next few years or so. I think this is an extremely good example to give us confidence that if we can win, if we can make a mark, if we can compete globally in an area where we had no background, we can certainly do a lot better in areas where we have strength, we have competencies. So I think the future of manufacturing exports is also bright in India, and we have an extremely proactive government which is standing firmly behind businesses. And you can see continuously the way PLI is working in a program or a mission mode, and they keep on improving things one after the other. So I think manufacturing is a very, very large opportunity, much bigger than services. And if we can get our act together, and there is no reason to feel pessimistic about it now, I think this will accelerate India's growth rates over next few decades. This is a very simple slide, but I think a very powerful one. To deliver growth consistently, you need strong macroeconomic parameters. The top left-hand side chart is the decadal inflation of India. And you can see how inflation in India has come off very sharply. And currently inflation is running around 4% a year. A result of that is on the right-hand side, the gap between Indian and US interest rates is now at an all-time low. I think lower cost of capital is a key enabler of faster investments, faster growth, and a sustained low inflation, I think, brings a lot of social good because inflation impacts poor more than the rich. So it is socially very desirable, and it also lowers the cost of capital, which is good for accelerated growth. I think the chart in the middle is the most important chart of this presentation. India's external side was always weak. We have in the past run trade deficits or current account deficits, between 2 to 4%. So we were perpetually short on dollars. So there was a quota system at work. You go abroad, you get so many dollars. Investments outside India were restricted. I think that is where the biggest change has taken place. So go back to that chart of rising service exports. So if you are earning 1% of GDP more in services, That has had a significant lowering impact on the current account. And India's current account deficit is now running below 1% of GDP and looks like it will stabilize around those levels. So there are three things what are contributing to a sharply lower current account deficit. One is rising service exports. One is rising inward remittances into India. So last 10 years, we have seen a very large number of Indians go abroad for education. And as these students start working, for the next 10, 20 years at least, they will keep on remitting money back to India. So inward remittances into India have gone up from 75 billion US to almost 125, 130 billion US in a short period of 5 years. So that is the second reason why this lower current account deficit appears to be quite sustainable. And the third reason is that the intensity of oil consumption in India's economy has moved down structurally lower. So we used to import about, in GDP's equivalent terms, about 5% of GDP was in oil imports. It is now down to 3%. There are various things which have contributed to this, but I think 10 years from today it should be even lower as we make the transition into electric vehicles. We have ample solar energy, ample thermal energy. So I think the 5 years down the line, I hope that India will look even better, even stronger. Now, how does this impact us in terms of equity returns? I think we all know in India that there is a very strong correlation between the long-term growth of Sensex and the nominal GDP growth. Because ultimately, the businesses make up the economy. Sensex has gone from 100 to 80,000 over 46 years. If you work backwards, it's a CAGR of about 15% and that is pretty close to the nominal GDP growth rates. It is slightly higher because nominal GDP also comprises of agriculture, but almost all listed businesses are in manufacturing and service segments of the economy. And agriculture has grown much slower for obvious reasons. Manufacturing and services grow faster than GDP, and that's why the longer term Sensex returns are slightly higher than the nominal GDP growth of the country. Now looking ahead, if inflation is low, if we are accessing home loans at 7.5%, if we are accessing car loans at 9%, if banks are offering you only 6% on term deposits, it is because your inflation has structurally moved lower. If inflation moves lower, it will lower the nominal GDP growth of the country. This is a welcome development, but it does impact the growth of businesses, the growth of profits, and therefore the sustainable returns of equities over long periods. So I think it's fairly well understood now, but I want to reiterate that in future, while real growth will be equal or maybe even higher between 6 to 7% compared to the past, but because of lower inflation, the room for Sensex returns is lower than the past. So I think longer term, when I started my career and when we used to meet 10 years, 15 years back, we used to routinely say 15%, 17% is what you can expect. I think the right expectation for markets going ahead would be around 11, 12% compounding. There is one more final aspect I want to share here. I think the profit growth in India in the next 5-10 years should be close to the nominal GDP growth. Because when you look at the Nifty composition and you look at it sectorally, I don't think there is room for margins to expand in any sector. Around COVID, the margins were extremely low for a variety of reasons. I think that margin recovery phase has fully played out and therefore the profit growth in future should again be very close to top line growth. So I think a realistic assessment of Nifty or Sensex going ahead should be around 11-12% on a longer term basis. I think last 1 year we have seen a time correction in equities. This has lowered PE multiples. This has taken out some excesses in the marketplace. And importantly, the earnings expectations or the expectations of earnings growth, which were running extremely high until 1 year back because of the very low base of COVID, I think have moderated. Last year earnings have probably grown around 6-7%. So today if you look at the consensus earnings growth estimates, it's around 11 odd %, which I think is quite realistic. Some of us may get disappointed by the 11-12% returns because last 5 years the returns have been extremely high. The right way to look at the high returns of last 5 years is like this. See, pre-COVID Nifty was about 12 odd thousand. In 5 to 6 years it should have doubled in the normal course, so which is where it is around 25,000. But in COVID it fell to 8,000. And that 8,000 has become 25,000. And something more extreme has happened in small mid caps because they fell a lot more. So instead of 2x the returns, we have made 3x the returns in large caps and 5x the returns in small and mid caps. And as I told you, today we have 20 crore demat accounts. Prior to COVID, there were 3 crore demat accounts. So this 17 crore or almost 80% of investors in India have no memory, no experience of markets prior to COVID. And that is why the vast majority of investors believe that these 20-25% returns are sustainable. I don't think that's the right way to look at these markets. The one more thing why we should not get disappointed with 11-12% returns is because the cost of capital in India is lower, or the cost of capital for equity investing in is sharply lower, both for local and foreign investors. If you look at the top chart, that's the volatility of Nifty. And if you look at the bottom table, that gives you the annual flows of domestic institutions and foreign institutions and the market returns over last 4.5 odd years. You will see that Indian markets are not dependent on foreign inflows or outflows anymore. The volatility of Indian markets over last 25 years has come down from 30 to 10. It is down by 70 odd %. So if volatility is lower, it does lower the cost of capital for local investors. The chart in the middle is the 1 year forward dollar premium. And you can see it used to be around 6-7%. It is now down to 2%. So even if you are a dollar investor, the cost of capital for investing in India is sharply lower. And seen in that context, I think 11-12% longer term CAGR return of Nifty Sensex appears to be quite attractive to my mind. I think going forward, I think the future of capital markets appears to be even brighter. The returns will be lower as we discussed, but I think the resilience of the market should be a lot higher. Why? In India today, if you look at the households' allocation towards equities, both on a stock and a flow basis, it is around 10%. So 10% of home balance sheets and 10% of annual savings are flowing into equities. As investors experience returns with lower volatility, there is a very good chance that this allocation towards equities will keep on going up. And this is what played out in US with the 401k. When money started going in, it led to lower volatility. That gave households more confidence to increase their allocation towards equities. So I feel that the next 5, 10, 20 years appear to be a period of virtuous cycle for Indian capital markets. Returns with lower volatility should lead to more asset allocation towards equities, and which should continue to lead to returns with lower volatility. So let me stop here, and we have I think 8 odd minutes. So in case there are any thoughts, any questions, I'll be extremely happy to deal with the same. Thank you.
We'll come across to you. Any questions? Yes.
Thank you. Thank you, Prashant. As always, listening to you, makes me feel a lot more smarter than probably what I am. So everything looks good, right? I think the growth, looks proper at this point in time. From what I could hear from you, 11-12% growth in markets is respectable, with mutual funds who can add another 2-3% of alpha to it. So that means a 15% return is possible for many of the investors, I would expect, as the
Your
active
voice
alpha.
is not clear. Can you bring the mic a little closer to you maybe? Yeah.
Okay. Any better?
Yes, I think slightly better, yes.
Okay, my apologies. So, okay, let me just get to the question, Prashant. So with growth, continuing to be averaging around 5.5 to 6 for the longest time, what should India do to get to a consistent 7% to 8% kind of a range? There is so much about demographic dividend. I also believe that can easily become a demographic liability if we as a country do not generate adequate amount of employment. There are headwinds coming in the form of artificial intelligence, so on and so forth. So just to wrap the problem, for an articulation, what should India do together to get to a 7 to 8% trajectory despite the headwinds that we have around us?
So I don't know whether I am competent to answer that, because India is a very complex country. And whatever you say about India, the opposite is also true. So when I am reminded of the words of Ruchir Sharma, he said that India will disappoint both the optimist and the pessimist. So I think India is not China, India is not Vietnam. We are a very extremely heterogeneous country. We are a democracy. It has lots of advantages, but it slows down the pace of change. Independent judiciary, independent media, everyone has a voice. So the good news is that in India, reverse change is also extremely difficult. So you will see that despite changing governments of different ideologies, there have been no negative reforms in India. We have never reversed the direction. So I think we can go to 7-8%. It is not unthinkable, because we finally seem to be getting our act together in manufacturing, which is where the big opportunity lies. You cannot expect services to grow very fast. India's volume of software exports is probably 30-40% of world. So we are all there. So we need to push manufacturing exports, and if we get our act together, I think it is possible. Cost of capital is low, external balance sheet on a flow basis is very strong. So I think we are moving in the right direction, and government is firmly behind businesses. We will need to get lot more investments into India. Like China, if you see the manufacturing, the global multinationals have invested billions and billions of dollars in China. So I think that's a slow process. To shift jobs in a GCC takes quarters, but to shift a factory will take many, many years. So I think if we keep on moving in the right direction, keep on improving ease of doing business, I think over time we should be able to get a lot more investments into India from multinationals, and I think we might hit 7-8% growth. But see, we don't have to worry about it. When it changes, we can change our expectations about the future, and that is what I think is a more reasonable thing to do. Yes.
Thank you, sir. And we have time for one more question. Absolutely.
Thank you. Yeah. Good morning, sir. I am Dhaval Doshi. Your session was very good, very insightful. Thank you. My question relates to gold and silver, the commodities prices. As we are aware that the prices have increased very much, but as an MFD, we are getting lots of query and to allocate funds towards this product. So I just need your expert opinion about the future gold and silver, as an asset class, and how much we should allocate. Thank you.
तो आप सभी ने रामायण पढ़ी है ना? तो रामायण का ओरिजिन क्या है? क्योंकि सीता ने लक्ष्मण रेखा को पार किया, तो मेरी लक्ष्मण रेखा इंडियन इक्विटीज पे समाप्त हो जाती. तो I understand nothing of gold and silver, but Indians anyway have more gold than rest of the world. So and that wisdom has done exceedingly well. So I leave it to the wisdom of each one of you individually. I am not competent to comment on gold and silver.
Okay, thank you,
Thank you.
sir.
Thank you.
Well, thank you so much, sir. Thank you for speaking on such a crucial topic. Can I please request you to remain on stage for a few more moments? And to felicitate Mr. Jain, I would like to invite Mr. Shrikant Nadella, please. Once again, thank you for speaking on this crucial topic and sharing those wonderful pointers. Please accept this small token of appreciation. Ladies and gentlemen, we had with us Mr. Prashant Jain.
Thank you so much once again. You know, today, my dear friends, is absolutely extraordinary because extraordinary members like you are going to be a part of something brand new, something bold, and something revolutionary, something that is going to define the future of KFin Tech. In a few moments from now, we will unveil Ignite. Now, this reveal won't just be about a fresh design or just a look. It is about identity. It is about purpose. It is about everyone, you and us. Your energy, your spirit, your belief coming together under one symbol. Ladies and gentlemen, we have now arrived at a truly special moment of today's gathering, the official launch of Ignite, an exclusive distributor engagement initiative by KFin Technologies Limited. And to do the honors, I would like to invite on stage once again Mr. Shrikant Nadella, Managing Director and CEO of KFin Technologies Limited, and also Mr. Sandeep Sikka, AMFI Chairman, Executive Director, and CEO, Nippon India Mutual Fund. Let's welcome them with a thunderous round of applause. Well, Sandeep, sir. Shrikant, sir, can I please request you to address our audience before we go on with the official launch?
I'm not sure I understood. So, do you want to address them? Yeah, but I would no, I'm going to first unveil it, right? Yeah. I will talk later. It's a 10-minute talk. Sorry.
All right, ladies and gentlemen, it is now time for the unveil. Requesting your attention to the screen. Let's do a countdown together, all right? Let's do it 3, 2, 1. Are you with me? All right. All right, ladies and gentlemen. 3, 2, 1. We have ignited the future. A truly special moment. Can we please play the AV?
14.48 crore new investor folios have been added since March 2020. Who added them to the ecosystem? India is becoming financially inclusive, but who is enabling it? You, the mutual fund distributor. You are bridging investors and their dreams. From bustling metros to growing rural markets, you are the backbone of India's financial revolution. For too long, the distribution landscape has been about principal-agent relationships. But we believe service providers like us must go beyond traditional boundaries. We understand that keeping up with regulatory changes and investor expectations can be overwhelming. KFin Tech recognizes you. We value your efforts in making India financially secure, and we have built something to support you like no entity does. Say hello to Ignite, a first-of-its-kind distributor engagement initiative by KFin Tech. We didn't just create this in isolation. We listen to the mutual fund distributors across India. We understand your ecosystem. We recognize that you're not just intermediaries. You are wealth architects. With Ignite, KFin Tech equips you with modern digital tools, real-time data access, knowledge enrichment programs, simplified workflows. Ignite is built on 4 strategic pillars. First, dedicated relationship support. Second, enhanced service experience. Third, digital tools to scale your business. And fourth, structured feedback and collaboration. Ignite bridges the digital divide with suite of services including Iris, your comprehensive multi-asset distribution platform, unifying product access and investor engagement in one seamless digital experience. Iris key features include integrated omni-channel platform supporting multi-asset classes, advanced reports and investor analytics, digital onboarding with KYC checks, and 360-degree investor portfolio across asset classes. Iris is more than a platform. It is a growth engine for forward-looking distributors seeking agility, scale, and a long-term investor stickiness in an evolving wealth landscape. Group SIP, institutionalized mutual fund investing within corporate ecosystems directly from employee salary. Digital NFO, turbocharged fund launches with AR and tag subscription links. Co-branded templates, create elegant, pre-approved and investor-ready marketing material with your branding. Daily settlement summary, DSS, get panoramic intelligence on your transactions and AUM movements. Empower Wealth, fully automated 360-degree wealth management suite with hyper-personalization and hyper-scaling capabilities. Clock enables granular tracking of commercial and non-commercial transactions from initiation to closure. Advanced API Suite, a sophisticated suite of APIs that power everything from onboarding and transactions to non-financial services. Influx, real-time data intelligence flowing directly into your systems. Learning and development, comprehensive learning programs including NISM SIF training and AI-based technology enablement. This isn't just about tools. We are building a trusted ecosystem of support, innovation, and empowerment. Whether you're in a metro, a small town, or a growing rural market, Ignite helps you reach new investors, join the revolution, transform your practice, elevate your impact. Ignite. Empower, engage, excel. An exclusive distributor engagement initiative by KFin Tech.
Ladies and gentlemen, Ignite. And together, let's ignite the future. And now to address our wonderful audience, I would like to invite on stage Mr. Shrikant Nadella, Managing Director and CEO of KFin Technologies Limited, as he walks on the stage. Can we have a thunderous round of applause?
Thank you. Very good morning. Well, I think we've heard a lot about Ignite, and I really don't know if anyone really understands as to what exactly that means in terms of the brass tacks of it all, right? I'll try to demystify it. But before all of that, very good morning to the esteemed CEOs and leadership of India's finest asset management companies. Representation from regulators, the AMFI, from KFin Mutual, and to my wonderful team who have put this together. But above all, and most importantly, the real superstars in this room and the architects of the India's financial prosperity, the mutual fund distributors. This event is for you all. Now, the energy that I've seen over the past 1 hour is palpable. I'm absolutely amazed. This is the very first time that KFin Tech has done an event such as this, but I can assure you that this is the first of many that we're going to start. On behalf of the entire industry, and when I say this, I speak on behalf of my asset management clients, I want to start with the 2 most important words to the mutual fund distributors this morning. Thank you. Thank you for your unwavering dedication, for your resilience in volatile markets, and for the millions of conversations that you have had day after day, turning skeptics into trusted partners and anxiety into opportunity. You are the true financial frontliners of our nation. Just a decade ago, in 2015, I wasn't even in the industry. Our industry's AUM stood about 10 lakh crores of AUM. Today, we stand at a staggering 80 trillion, which is very, very close to being $1 trillion industry, right, in a record 11 years. Now, you have transferred the concept of SIP in India, channeling more than 28,000 crores every single month. Today, we have an active 10 crore SIP accounts. And there is truly one list of stakeholders who have made this happen, and that is the mutual fund distributors. For the longest time, I believe that investors, I'm not saying that they're exactly spoiled for choice, but enough has been done, enough is being done for ease of doing business, for ability to invest, for ability to get your transactions processed, service requests, what have you. But we always felt the partner ecosystem needed a lot more support, needed a lot more technological and the digital finesse that is required for you to drive your business. And at KFin Tech, about 6-7 years back, we actually started defining our vision. And with no disrespect to our clients who actually give us our paycheck, we have zeroed in mutual fund distributors as probably the single most important stakeholder, for we believe that like most asset classes, especially the mutual funds, they continue to be a sold product, sold based on the trust and the advice that you provide. And in that context, having made you the single most important stakeholder, what is it that we have done? We started asking foundational questions about the work we do, the support we render to the distributors. I can give you certain anecdotal references in terms of what is it that we have done. One of the things, was a moment of realization that many of us, employees, we all get our salaries end of the month. We know how to plan our month. We know how to pay for fees. We know how to pay for rents, what have you. But if you are a mutual fund distributor distributing 25 mutual funds, guess what? You will get your commissions on 8th or 10th or 15th or 20th, so on and so forth. I always wondered how you plan your months, how you plan your lives. We took it upon ourselves to see what is it that we can do as an organization to make sure that you get your commission structures at the earliest possible time. It may look very simple on a paper, person, distributor A and commission X amount, but the computation, given it goes back into 20, 30, 40 years of trail, is an extraordinarily complex process for us to do at our back end. We crunch the timelines from about 10 to 15 days to now about 2 days. We intend to get it done as quickly as real time should it be allowed to. Now, this is in some sense one tiny step in terms of making sure that we provide the support that the mutual fund distributors need. We've created several more, distributor branded solutions, what have you. We will talk about much of that, in time to come. Now, I just want to make sure that, we talk about the journey from, 10 lakh crores to 80 lakh crores to where we are today. There is a plan to get to 100 lakh crores. I think there is a longish timeline of 2030 published, but I'm sure with the industry's pragmatism and the support from the mutual fund distributors, we probably will get there in about a year or a year and a half, and I surely hope so, and we will make sure that we'll do everything that we can to help in that journey. You have democratized the wealth creation, taking it from big cities to the heartland of India. The growth from beyond the top 30 cities is a testament to your tireless efforts. It is not easy to be able to be in every single city to convince investors. That said, there is a moment of reckoning, probably an analogy I'd like to draw about 8-10 years back when cryptocurrency was at its peak. Guess what's the AUM that cryptocurrency managed to get in about 4 years? About 75 trillion rupees, pretty similar to what our mutual fund industry AUM is today. We took this long to get here, but that's what is needed. A stable, trustworthy asset class to be built needs time and is not speculative. But the thing that could be learned, from that particular crypto journey is the ability to reach every last household in the country. There is a path to get there. And that path is through financial intermediation. That path is through you. And it has been demonstrated in multiple other scenarios and not just in mutual funds. I think we embrace digital and technology, we will get there sooner than later. Now, what is Ignite? Ignite is effectively our initiative to bring the ecosystem of mutual fund distributors, ourselves, and the asset management companies into the same room under the same hood. We believe that together we can drive the industry. We believe that together we can make the investors far more affluent, and to Prashant's point, to take the country forward. My grandfather, my great-grandparents were freedom fighters, and they always taught me as to the sacrifices they have made to get us all the freedom that we so conveniently take for granted. I do believe that it is our mandate that we drive financial freedom for the next generation Indians so that they do not ever have to bend in front of anybody else in the world. And that journey cannot be possible without this particular industry and all of you put together. That is the true calling for us in terms of, as an organization, what we aspire to do, help every last Indian to be able to get there. Today, this organization manages close to 15 crore Indian individuals, whether it is on mutual funds or whether it is on the primary and secondary markets where we manage IPOs, so on and so forth, or into the niche alternatives market or into the national pension system, which roughly translates to 80 to 85% of any human being in India who has ever invested has had or will continue to have a touch point with KFin technologies. It is something that we take it as a matter of pride and as a matter of solemn commitment that we will continue to better our solutions. Let's talk a little bit about Ignite. The single largest initiative that we have taken in this is the launch of a platform called Iris. Many of you have seen it. Most of you would have downloaded the platform and are using it today. Close to 25,000 distributors are on it. We intend to make it about 50,000 into the next 4 to 6 weeks tops. Now, what does this platform do? What is the genesis and how is it going to help mutual fund distributors? We have seen that the mutual fund distribution count in India continue to stabilize around 125 to 175,000. It has been range bound of distributors in the country. Now, even as the investor count has quadrupled, even as the AUM has quadrupled or even grew tenfold, the mutual fund distributor count hasn't increased. And there are good and bad reasons. Part of the reasons that I want to belabor today is about a very, very simple basic fact. Mutual fund distributors do not make as much money as required for them to sustain their livelihood. I'm not talking about the big distributors, but there are several thousands of distributors who need to have a corpus running into hundreds of crores for your commission to be of meaningful income for you to sustain, which means that constantly there are new distributors coming, but there is also a leaky bucket. A lot of distributors are exiting the industry. Now, we have spoken to hundreds of distributors over the past 1.5 years because we wanted to create an ecosystem where the financial intermediaries thrive in this, and that is how the overall industry will grow. Now, we have come to believe that if the same mutual fund distributors are given an opportunity to sell and service additional asset classes to the same investor, their ability to generate higher income significantly exceeds the time investments that they have and the opportunity cost. What does that mean? I'll exemplify it. If I were to be a mutual fund distributor and then you are my client and investor, today I can offer only mutual funds as an option for you to buy. Now, we have identified that by your ability to sell SIF, the new asset class, alternate investment funds, portfolio management services, why restrict to this? Can you also sell fixed deposits, loans, insurance products, pensions, so on and so forth? If you could do that, it will significantly enhance your revenue generating potential. There is no platform in the country which allows you to do it today. Now, look at it from your perspective as an investor. I do not have to talk to a person A for mutual funds, a person B to get a fixed deposit, a person C to secure a credit card, a person D to get a forex loan because my child is traveling abroad. So what we have tried to do, and as of now successfully done so, is integrating 5 different asset classes, that is mutual funds, AIF, PMS, SIF, fixed deposits. Into the next month, we are adding insurance, loans, and credit cards. Now, as a distributor, you have many more assets and lot more revenue generating potential that you have. For the investors, you have one financial butler, so to speak. You are able to cater to every single service an investor needs. It's definitely a match made in heaven. Both the entities stand to gain, and most definitely the mutual fund industry in the process. That is the true intent behind IRIS, to be able to create the first platform which is expected to enhance the financial viability of distribution. By engaging with multiple asset classes, driving CRM, you are going to be in a position to directly engage with your end investors through this very platform on the CRM. You will also be able to engage with us as a servicing organization in terms of your service requests, grievances, what have you. So that is what IRIS is all about, ladies and gentlemen. I am extremely hopeful that this is going to change the face and of the financial intermediation. Lot many more people should want to be part of this process. To give you another small example, there are close to 1 million plus individuals today who sell home loans, so on and so forth, home loans or personal loans and what have you. They are going to be in a position to be on this platform. They are going to be in a position to, hopefully over a period of time, through our multilingual platform called Pathshala, clear NISM and then become ARN holders and basically drive the growth of the industry overall. That is effectively what IRIS is, and to me, Ignite subsumes IRIS as a platform, but more importantly, an engagement scenario where we have a dedicated set of individuals who are going to work with you, who are listening to you, solve every last problem that you ever had, take feedback in terms of every improvement that you would want for us to do. It is our solemn goal and commitment to you that we are here to make your lives significantly an easier one in terms of the processes that you do, in terms of the administrative overheads that you have, but most importantly, to make your profession a lot more financially viable. Thank you so very much. We have a fabulous rest of the day, a lot of panel discussions. Many of those would significantly benefit you, help you understand in terms of what's in store for you from the industry. Thank you so very much once again.
Well, thank you, sir, for sharing your thoughts with us and setting context. So can I please request you to remain on stage for a few more moments? All right. No worries, no worries. All right, ladies and gentlemen, Ignite is more than just an initiative. It symbolizes a new chapter in our partnership built on collaboration, innovation, and shared growth. And what better way to mark this beginning than with a tradition that represents knowledge, wisdom, and enlightenment, the lamp lighting ceremony. And for the same, I would like to invite our wonderful dignitaries on stage. Please welcome Mr. Shrikant Nadella, Mr. Prashant Jain, Mr. Sandeep Sikka, Mr. Prem Khatri, Mr. B. Gopkumar, Mr. Saurabh Nanavati, Mr. Ganesh Mohan, Mr. Vetri Subramaniam, Mr. Swaroop Anand Mohanty, Mr. Rakesh Bhandari, Miss Siddhi Bhatia, Mr. Vivek Mathur, Mr. Nirad Shah, and Mr. Deepak Shenoy. Miss Madhu Lunawat. A very, very warm welcome. Can we have one round of applause for all our wonderful dignitaries? And now requesting you to please do the honors of lighting the lamp. Please step forward. If I could request you to please join us. Ladies and gentlemen, the lighting of the lamp has always been a symbol of dispelling darkness and igniting new possibilities. And today, as we light this lamp together, we celebrate not only the launch of Ignite, but also the spirit of partnership and progress. If I could request our dignitaries to please step forward and light this holy lamp. Like I mentioned today, we are not just here to celebrate the launch of Ignite, but also the spirit of partnership and progress that it truly, truly represents. Thank you so very much. Can we please capture this moment? 1 second, I think. Let's capture this moment. Thank you so much. Can we please clear the stage? With that, ladies and gentlemen, it is now time for the principal address. We are truly privileged to welcome our chief guest, who has over 28 years of experience in financial services and a deep expertise in asset management. He has been truly instrumental in shaping the industry. Well, since joining the company in 2003 and becoming one of the youngest CEOs in the industry in 2009, he has led the firm through remarkable milestones. The acquisition of Goldman Sachs, India Mutual Fund schemes in 2016, becoming India's first listed asset management company through an IPO in 2017, and Nippon Life Insurance Japan becoming its primary shareholder in 2019. Beyond corporate achievements, he has also played an active role in industry development through AMFI. Please put your hands together for Mr. Sandeep Sikka, AMFI Chairman, Executive Director, and CEO of Nippon India Mutual Fund. Welcome, sir.
Good morning, friends, and thank you for such a long introduction. I don't think so I need that, but I'll say, more importantly, today it's an honor and privilege to be here, more as an AMFI representative. I think it's first, let me again welcome all the key stakeholders of the industry who have made this industry what it is today, starting from all the MFDs, the regulator, Shrikant, KFin for laying the foundation for the industry, Prem, Cafe Mutual being the platform for getting everybody together, and more importantly, all my colleagues from the mutual fund industry, and many of them who play a very active role in AMFI. And when I say AMFI, when play a very active role in AMFI, for all practical purposes, do two jobs. I can see my colleague Saurabh sitting there. He spends more time in AMFI office looking after the ops than his own company. Yeah? And similarly, there are a lot of other colleagues who do a lot of work. So once again, welcome to all of you. Also, congratulations, Shrikant, on this great, the launch of Ignite. For me, the way I see it is that's the way the industry is changing. And it's important to get both digital and also keep the investor interest in the center. Whatever the investor wants, we have to give it, and this is the platform that achieves that. So once again, congratulations to your team for achieving this. Let me start this by, I think while I would also, echo what Shrikant mentioned, Idly, I've been given 15 minutes. I should not have been given more than 30 seconds because all we have to say is thank you to all the advisors and the distributors who are here who have created this industry. I think all of us are blessed to be at this point, to be in India, a country which is growing, country which is giving us so many opportunities. And also, I take honor and privilege, and to say this, recently I was in Japan, a part of the PM delegation which went there. It was an experience for me where PM addressing about India in a room full of 200 Japanese, and Japanese normally do not have too much emotions, but when after the Prime Minister addressed 2 Japanese in Hindi, there was a deafening sound of clapping in this hall. That is all about India now. So first, we are lucky to be in India, a country which is growing. Secondly, we are lucky to be in an industry, a mutual fund industry, which is growing and has great future. And third, and the most important thing, we are lucky to be in one of the most noble industries because we are helping people achieve their goals, achieve their dreams. It rarely happens you get all the 3 things together. So once again, we are all blessed to be at the right place at the right time. But once again, I say this, the industry would not achieve what it has achieved without contribution from each one of you. As we talk today, the Shrikant mentioned about the numbers, I think we are talked about 10 years. In 10 years, we moved from 10 lakhs to 80 lakh crores. You made me think, this is my second term as an AMFI chair. Exactly in 2015, when I left the AMFI chair, at that time, the industry was 10 lakhs, and the SIP book was 2,000 a month. Today, we are where we are with 80 lakh crores and almost 28,000 SIPs. I mean, let me be very, and again, now I'll go back to what Prashant said. India has this potential. India has this thing of always upsetting all calculations, both for optimistic and pessimist. And I can tell you, none of us in the industry at that point of time would have thought that we'll be touching 80 lakh crores. But one thing we knew, that the direction was right, the foundation was strong, and each one of us working towards that. So I think what we have achieved today is a big number, but still, it's just the beginning. Again, coming back to, I go back to my journey with mutual fund industry. Started about 25 years back. And at that point of time, I still remember, I've quoted this few times, but I'll again quote it even if some people get bored. My father had just retired from his government job. And that's the first time, I requested him, and I use the word requested him, to look at mutual fund industry. But at that point of time, typically his advisor, I was not his advisor at that point of time because I was a young boy. He thought you don't have that much experience. You are saying this because you run a mutual fund, you are a part of the mutual fund industry. He still was biased towards banks. At that point of time, majority of his allocation went to bank, and the reality was, and he was not wrong, the ecosystem was such at that point of time. We did not have such a strong ecosystem of mutual fund advisors. Today, we stand here. We are 1/3 of the bank deposit in India, and that is one of the biggest achievements because Indians for years confused between saving and investing. They could not figure out the difference between the two. And it's all of you who made every Indian aware that saving is good, but investing is for long term. And that is what has changed India. Again, continuing with the Prime Minister's vision of Atmanirbhar Bharat, I think it gives us a lot of, we all should feel happy how we are contributing to that. Today, we are at a very interesting juncture. Today, for the first time, I think we saw Prashant, for 3 back-to-back, not only 3 quarters, but year after year, the domestic institutions are becoming stronger. And again, we are seeing, we definitely need foreign money, but we are no more dependent on foreign money. And if you look at the gap between the domestic shareholding and the foreign shareholding is the lowest ever since the independence of India. That is again something that each one of you is contributing to. Each one of you is helping conversion of household savings into the capital market, which is helping the growth of the country. And in the process, also helping every Indian participate in the India growth story. The couple of things which have happened over the last few years, and again, one thing that's echoing in my mind what Prashant said, humans human beings give a lot of importance to negative news. All these years, there have been a lot of negative things which have come our way, including some of the issues which would have come and we felt whether the industry will grow or not. But the reality is, thanks to the regulator for creating such good framework, creating such a strong foundation, today our industry continues to grow irrespective of what's happening. While the India is also growing, a lot of other sectors are growing, but mutual fund industry grows faster than all industries in India, and I'd like to thank the regulator for that. Again, some of the interesting trends which have emerged during this period have been the emergence of SIPs. And once again, I think full credit to each advisor, because it's not easy. And I think it's always easy and beneficial and remunerative to sell lump sum. But the reality is, SIP was always the small ticket, was not easy. But today we have come to a point where that has become the foundation of the mutual fund industry. And not only the mutual fund industry, but the Indian capital markets. As we talk today, the SIP, as I mentioned, 10 years back when I completed my earlier term as an AMFI chair, at that time the SIP book was 2,000 a month. Today we are 28,000 a month. But let's try to see it a little differently. How much headroom do we have going forward? Even at this point of time, total number of investors in India are still 6 crores, less than 6 crores. If we were to look at the SIP at 28,000, what we are talking is every Indian is investing 200 rupees per month with 3% penetration in India. If we were to go by Indian GDP doubles from here, triples from here, and also the number of investors double and triple from here, we are talking the SIP of 28,000 can touch 1 lakh crores a month, and it can happen. And this time I'll be a little more bullish. I'll say whether it happens in 5 years, 7 years, or 8 years, but very clearly it's going to happen where we will be touching 1 lakh crores of SIP a month. And that is going to be the real strength of India. Again, I'll go back to during my last Japan visit, I think Prime Minister said 2 things, and I'll try to correlate that to the mutual fund industry. One of the things that he mentioned there was world is no more looking at India, but is getting dependent on India. And secondly, what he said was from make in India to make for world. And why I say these 2 things, and coincidentally what happened immediately, what he said, and after that I was 3 days for business. And coincidentally, 2 things happened. And both the things, when I met a lot of other asset managers there, one of the key things was Indians are getting wealthier day by day. When can we get foreign money from India? So that is, the world is now getting dependent on India. And the second thing that came common across the world, across all meetings was, what is this SIP? How can we introduce the SIPs in Japan? So this is what we are talking, not make in India, but make for world. And each one of you may not be realizing while you're contributing a lot for the investors in India, but I think the world is watching us, world is dependent on us, and we will be soon making for the world, and it may be the SIPs for the global asset management industry. Again, thanks to KFin and all of the stakeholders. I think what we have seen, the digital adoption in the industry, and very clearly the way forward will be digital. We have seen the KYC, e-KYC, video KYC, Aadhaar-based verification. A lot of these things are happening. And it is going to be, while I think the physical part, there's nothing wrong in it, but from a long-term point of view, to get away with these inefficiencies, we'll have to move to more digital. And once again, I compliment KFin for not only this initiative, but a lot of other things that you're doing a digitalization over the years. As I start my second term as AMFI chair, and also I want to thank all the AMFI board members in the past chairman who've laid a great foundation. And I think never before I can say has been the job easier for the AMFI chairman, incoming AMFI chairman, because the momentum is on your side, the foundation is there. But once again, I will say all of us, as we work towards AMFI version 2, I think one of the first things is going to be deep engagement with all the stakeholders, democratization, going to smaller cities and towns. Today, we have also started the Choti SIP and a lot of other initiatives that as an industry we are doing. Mutual fund sahi hai as a concept. Today, it's something which everyone is talking about. And there was an earlier discussion. There was some reference of EVs, electric vehicles. It was a moment of pride for, I'm sure, all of us when we saw one of the EV manufacturers saying, EV sahi hai. So, dhire dhire you are seeing how it is going. So that is the starting, and that is what tells you how things change so fast. Similarly, recently, I think we started the Jan Nivesh campaign, which was covered in 100 cities, and there were more than 10 lakh people who signed that campaign. Choti SIP, and more importantly, Mitra, which has been launched by AMFI, which is again in case something unfortunate happens to the unit holders. I think how do you ensure the heirs can get it very smoothly, everything smoothly. Coincidentally, and I can share with you, as I was talking here, I was waiting for my session, I get a message from a CEO of a foreign bank saying, my father-in-law passed away, I'm finding it difficult how to move the assets. It's that big a problem. I mean, now imagine, it's not how deep this problem would be for a common man. He's a CEO of a foreign bank, he's finding it difficult. So AMFI continues to make it easy for investors, and not only the present investors, future investors who will join the industry, and also the investors who unfortunately may not be there, but their nominees get everything smoothly. I would once again like to thank all the MFDs for bridging the gap between India and Bharat. And today, it's a proud moment. I mean, 20 years, in 2012, SEBI introduced this concept of B30. B30 was basically a nudge and a push to go to smaller cities and towns. I'm happy to say today as an industry, we cover all districts and all pin codes of India. Today, it is no more about the bigger cities. We are going, recently industry opened its branch in Leh, and one of the journalists to ask this question, so B30 is working. I answered that B30 it's over. Now we are going to B300. So that's what is the new India and how the mutual fund industry is working. So this is where I think how each one of you is playing a very, very big role towards that. Once again, I would like to congratulate KFin for IRIS. And for me, it was not about digitalization. For me, the way I saw it was, it has been kept with the investor in mind. Whatever investor needs, we'll have to do. And many times, a lot of times, many of us think what is right, for our AMC or what is right for the distributor. But all of us at any given point of time will have to change, inverse this by saying, what is right for the investor is right for the industry, is right for all stakeholders, is right for the distributor, is right for every AMC. So once again, I'd like to compliment each one of you, and I'll conclude by repeating what SEBI chairman said at our AMFI 30th anniversary. It is not about assets under management, it's trust under management. And each one of you is contributing to that. Our actions are going to play a very important role. So once again, look forward to together taking the industry to the next level. Thank you very much.
Thank you, sir, for sharing your insights, and we take cognizance to everything you said. And sir, आपने यहाँ जो भी कहा, वो बिल्कुल सही है.
Thank you.
So can I please request you to remain on stage for a few more moments? And now to felicitate our chief guest, I would like to invite Mr. Shrikant Nadella on stage, please. Requesting you to please take center stage. Ladies and gentlemen, it is our honor to felicitate Mr. Sandeep Sikka. Once again, sir, thank you so much for being here with us.